Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for the segment, we have Mark Marex, Director of Index Research and Development with Nasdaq Investment Intelligence. He joins us for an update on Nasdaq-100 technicals. We'll take a look at RSI, moving averages, as well as options positioning. Mark, it's great to see you as always. Welcome back to Trade Talks, and let's kick it off and take a look at some RSI.
Thanks, Jill. Great to be back with you. Let's start off with this relative strength indicator. It's a 14-day relative strength index. And what you're seeing here is about the past 5.5 years, the trajectory of the Nasdaq-100, the NDX in the blue there, and then that 14-day RSI in the gray dashed line, kind of oscillating a lot of the times between the green and the red lines going across there. Those are the levels of 70 and 30, which are considered to be sort of the crossover points for overly bullish or overly bearish, respectively. So what really stands out to me when I look at the big kind of circled area towards the end of the chart on the right there is that the RSI really hasn't jumped above or even close to above the level of 70 this quarter. Even though we were up almost 10% on the index quarter to date through October and November. November was another pretty nice month of gains, a little over 5%. We're just getting to about 60, so strong price performance, but not overly bullish behavior because there are still, quite a bit of down days mixed with those updates. So something to keep in mind, as people start to think about, well, is this going to be a repeat of the summer rally? Are we going to have another pullback again? Worth keeping in mind, where this RSI indicator indicates if it's getting close to 70 or if it stays kind of muted like it has been.
And what if we take a look at the short-term moving average as it relates to the Nasdaq-100?
Yeah, so moving averages here, you're seeing the 20-day and the 50-day. Obviously, to me, the big deal here is that the 20-day just crossed above the 50-day again recently. And when you see that last area of the chart again, the 20-day in gray, the 50-day in red, you can see that blue line for the NDX. It almost is kind of telling you that it wants to go up from here, right? It had that sharp shot up in mid-November when we started to get some of those better inflation prints and maybe a little bit more hints of a dovish pivot from the Fed. And to me, it looks like it is positioned for more of an uptrend. That's not a forecast. That's purely kind of looking at the last few times when we've seen, the 20-day cross under the 50-day, which is usually a bearish sign, and how those recoveries have played out going forward. That's one of the crossovers that you're looking for to establish kind of a better uptrend. And we've got it now. So, fingers crossed that this holds and can build upon itself.
And of course, we have to take a look at the longer term trend as well.
Yeah, so here, longer term, we're still, unfortunately, sitting at a pretty bearish angle here with the 100-day pretty much kind of flattening out, going horizontal, not quite in an uptrend yet. And it's going to be a while before this crosses back above the 200-day moving average. But either way, right, it's a good sign that this is no longer trending downward as it has been, as you can see, for pretty much the entire year-to-date period. We haven't really seen this kind of horizontal flattening out of the 100-day. Maybe that is an indicator that a bottom has been found in October at some point, and that we're going to be maybe going from a short-term uptrend to a longer-term uptrend.
And our final indicator, Mark, options positioning.
Yeah, so the two things I want to point out on these charts, right? When you talk about trying to forecast what's going to happen next year, it's really hard to do, especially given the number of kind of unique macro factors that are coming together and how unpredictable some of those are. Assuming nothing big happens in terms of, international conflicts and the energy markets, and the commodities markets getting hit really hard again, like they did earlier this year. I think it's okay to be optimistic now about inflation normalizing sometime in 2023 and the Fed at least pausing with rate hikes sometime in 2023. And so when you look at, people talking about, well, we're maybe getting into a recession in the US, things are really slowing down. I think the options positioning really does support that. That is the consensus view, right? If you look at this, this is for the entire, SIBO equity market. The put call ratio has been way, way above this long 7-year trend line over the past couple months. To me, that tells you market participants are fully hedged here and very much expecting a recession, expecting potentially the worst to happen to equity markets, where not just valuations come in, but the denominator of the PE, right, the earnings part decreases as well. And that leads you into a nasty bear market. But look at what's happening with volatility on the right. This is the Nasdaq-100 volatility index, ticker VolQ. And we approached 40 a few times earlier this year, right, when things were scary in 1Q, 2Q. We didn't really get that close this time around when we made the bottom in October. And we are now back down to a level in the mid-20s that I think is very, again, supportive of more kind of the pain trade, as they call it, being on the upside, people getting caught off sides with stocks moving up in the short to medium term, as opposed to the pain trade being on the downside, which is where it was most of this year. So I think people are positioned for the recession. There's no sign of it whatsoever. Job growth is super strong. A lot of parts of the economy are still in a really good expansionary place in the US. And so it'll be interesting to see, does macro kind of globally stay fairly constant and calm next year? And is that a base off of, to build a new market cycle, a new bull cycle potentially? We'll have to stay tuned and see.
Yeah, we certainly will, Mark. Thanks for the insight. We appreciate it as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.